everyone, and we're back. Thank you so much for joining us for this next session. If you missed on that last session with Kate Carnell, please go back in the scenes. There will be the recordings after this summit. If you already have access to that, great. If not, we can certainly help facilitate that. But look, a great talk, and I think you'll all agree if you did see it that, you know, Kate is such a wealth of knowledge. I think we could have just listened to her for a couple of hours on some of those key points she raised. But I am really super excited about our next speaker. You know, Warren Hogan is just another one of these people that every time I speak to him, I feel like I'm walking away with a wealth of knowledge. But Joe, maybe I can kick to you and you can just give a little bit of background about Warren for the audience.
Absolutely. Well, look, Warren Hogan is one of Australia's top economic analysts and commentators. Oh, dear. Okay. Not sure why. Can everyone out there hear me? Why don't you show me something on chat if you can hear me? Okay, Warren can hear me. Fabulous. Okay. I'll continue then. Warren's got a background spanning 20 years in banking and financial markets, including being the chief economist at ANZ Bank and Credit Suisse, an advisor to the ANZ Management Board, and CEO and advisor to the Australian Government Treasury. Warren, we are so excited to have you on board. Please, let us know where you're going today.
Well, can't hear you, Warren.
And a great environment. Give you some insight into what I'm seeing for the economy and business in Australia over the course of the next couple of years. So to get started, straight into the picture, as us economists love to do, this is the best representation of the economy, I think, at the moment. That is GDP each quarter, going back a few years and looking forward a few years. And you can see the massive impact of the pandemic, the Delta lockdowns. But the thing that stands out here is we've bounced back every single time. The problem we've got coming up is that we're running out of capacity. That's that dotted line, so-called potential that economists refer to. And you can see it every day, labor shortages, materials shortages, supply chain disruptions. This is our great challenge. So we have a strong economy. There's no shortage of demand in there, but we've got a challenge in trying to manage this strength. For businesses, this really comes down to two main challenges. The first one is labor shortages, and I'm going to go into that into some detail. The second one is rising inflation, which is essentially rising costs and how to manage that and how to pass that on to your customers if indeed you can. So that's what I'm going to focus on today, and in the process try and give you some insight into how to manage through this economy. Why are we doing so well? Well, the simple fact of the matter is we have been provided massive amounts of government stimulus through this pandemic. Rightly so. The government acted quickly and swiftly to support incomes, massive fiscal stimulus, the likes of which we've never seen in this country. And the government continues to do it. And I've got a funny feeling tonight with our budget before the election, yes, an election budget, they're going to keep doing it. We've already got some hints of that in the press. The chart in the first chart is showing essentially the impact of the economy on the budget in blue, and then what the government's doing with its policy. So the big hit from the pandemic was the negative blue line, and they responded with a big support. That's all very much to be expected. But since then, the economy's performed well, and the budget has actually been given money from the economy. That is higher tax receipts, lower welfare payments, and the government's essentially recycled that back into the economy. I think that process is going to continue tonight. And that's a massive tailwind, government spending in our economy. But of course, there's more to it. There's the low interest rates. They're at rock bottom, rates we never thought we'd see in this country. And quite frankly, I don't think we should be seeing. They should be going higher. A little bit of a rate hike in this country is a good thing, but that's not happening yet. And those low rates are supporting business lending. They're supporting household borrowing, all sorts of things. And then the final point I'd note, a little bit technical, not a lot of people talk about it, but the Australian dollar is actually very low. It's at 75 cents. It's gone up a little bit lately. But compared to where our export prices are, that is commodities, we are a major commodity exporter, it's actually very low. You can see the last time commodity prices were here, the Aussie dollar was at parity with the US dollar. So this is providing a stimulus to our mining sector. It's not acting as a headwind in any way, really, to our other exporters. Unfortunately, it's a little bit inflationary. But these are huge tailwinds behind this economy, and it explains why the economy is doing so well. So interest rates are going to go up. This we should not fear. The first wave of interest rate increases will probably take 2 or 3 years, and they might only go up by a percentage point or two. It's actually probably going to take, 6 years to get interest rates back to where they were, what we thought was a normal rate from a few years ago. So interest rates are going up, but if we do it in a timely way and manage the economy, they're not going to go up a lot. You need to start factoring that into your planning. The big issue that sits there that we haven't seen before is these household savings. All of that stimulus has eventually ended up in people's bank accounts. So this shows you the household saving rate, and a measure that I've constructed and worked on for decades, actually, from the Melbourne Institute Consumer Sentiment Survey, that shows what consumers want to save. So they're saving much more, and that makes sense because there's been restrictions in the economy. This is money. This is, dry powder, you might say, ready to be spent. Is it spent on investment property? Is it spent on consumption? Is it spent on holidays? We don't know, but it's likely to be spent, and that's going to give another big tailwind to the economy. All right, let's start now with labour markets. The unemployment rate is being forecast to decline to 3.75% by the government. Now, this chart here goes back 50 years. Now, that's a great number in terms of getting people into jobs. I think we're going to go lower. I think we're going to go to 2.8%, and we're going to stay there for years to come. That's a great outcome for this country, but it's going to represent major challenges for business. Challenges which just about every organisation in Australia is having to deal with right now. The demand for labour has gone through the roof. That's a technical economist term. You can see here job vacancies have surged through the pandemic. This is going back to 1979. They move with the economy. They go up and down. We've never seen anything like this. Currently, job vacancies are running at twice the rate, at about 400,000, but twice as high as what you would normally expect in a strong economy. And through this period of strong demand for staff, the supply of staff has collapsed. The working age population has gone negative for the first time in Australia since World War I, over 100 years ago. And that's because temporary visa holders have had to leave with the borders being closed. So we've got a crunch, and that's being felt right now across the economy. It's in crisis in many industries and many firms as people are seeking higher wages in other locations, or there's other opportunities. The borders are reopening and people are coming back. We've got now a couple of data points from December and January on arrivals for temporary and permanent visa holders. The government only opened up these programs again in November last year, so it's early days, but people are coming back. You can see the government's projections for net overseas migration on the long-term chart. That's probably the longest term chart I've got on Australia, going back to 1861. I'm not sure what historical benchmark I can use for that. But what you can see here is a big bounce back in migration over the next few years, and that's going to alleviate those labour supply problems. So the issue right now is we are at crisis, and managing and retaining staff is critical. Attracting staff is difficult, but we're going to start to see this gradually ease as people come through the borders. And of course, the government's very focused on increasing participation and upskilling and reskilling. The problem won't go away quickly, but it should ease over the course of the next few years. But this tight labour market has implications. So we're already seeing strike action start to pick up, usually with big public sector unions, so industrial disputes. This is getting exacerbated by the fact that inflation's rising, the cost of living's rising, which the government is going to try and address tonight in their budget, but it's giving people a reason to look for higher paying jobs. And that's that labour turnover data. That data finishes a year ago. We only get it every year, and we haven't got the latest numbers. But this is why it's such a shock to Australian business, because turnover in the Australian labour market has been falling for 30 years. And I think when we get the latest data point in a few months' time, that's going to jump up strongly. And the reason I say that is the most recent data shows that the Great Resignation has actually arrived in Australia. Let me explain this data to you because it's really interesting. It only comes from February this year. First is the number of people in Australia who are expecting to either change their job or retire in the next 12 months. And that has surged in the last 12 months to a record high level. It's now almost 800,000 Australians are expecting to move employers. And you can see as a percentage of the labour force, or as those employed, that's now at the highest level in 10 years. And that's one of the consequences of this unusual mix we have of a labour shortage and rising cost of living, is it's giving people reason to change jobs, particularly low and middle income earners. And of course, there's also the baby boomers. They're starting to retire and retire in big numbers. And of course, when you've seen your house price go up and your share portfolio go up, why not? So the Great Resignation has arrived. It's taken a bit longer than what we've seen in America, where it's been happening for a year or so now. But this is only going to amplify the challenges around labour force management, workforce management for businesses. And it's going to be one of the key factors that distinguishes success or not for Australian businesses in the next couple of years. Inflation is the other big issue. It's here, and it's here with force. The pandemic brought an inflation shock in the form of goods price inflation. So let me explain that. When lockdowns have happened and governments all around the world provided income support, people couldn't spend their money on many services, such as going out to restaurants, such as going on holidays. So what did? They bought stuff. And of course, this big increase in the demand for everything from motor vehicles to fridges to furniture, the global manufacturing system couldn't cope with it. Producer prices have surged in the major manufacturing economies of the world. And they're the big economies of the world: China, Japan, America. You can see here, they're at the highest level since the 1970s. Now, so far, we're not seeing a lot of it in Australia, but we're certainly seeing it in America, most particularly where inflation is around 8%, and in Europe, where inflation is around 6%. It's coming, unfortunately. We're just lagging. And I hate to contradict the Reserve Bank of Australia, but I don't agree with their views on this. The chart on the left is imported goods prices. So this is consumption goods. So that's all your clothes, your fridges, your freezers. Capital goods, your John Deere tractors. And then it's the big one, intermediate or input goods. This is almost half of all goods into the country, and they're goods that go into the production process. So they go into making something else. They've gone up by 28% in 2021 alone, the biggest in 40 years. Now, consumption and capital goods so far have not increased that much, but my strong concern is that's all about to happen, or is it happening right now? And it's why these cost of living issues are not just about petrol, not just about food and grocery, but they're about everything. They're about furniture, they're about cars, the lot. So central banks of the world have been somewhat complacent. You'd wonder why they haven't been jacking up rates earlier, concerned that inflation is going way above their targets. And the reason is that in a modern economy, real inflation that's lasting is when wages go up, and that's the major cost input into services. And as you can see here in Australia, domestic inflation remains quite contained within the RBA's target band. But the thing is, this one-off shock to the economy from the pandemic, the goods price inflation, now we're seeing the cost of living going up, and we're seeing these tight labour markets. It will eventually start to filter through into wages. We're seeing that in the anecdotes, even though the data hasn't really shown it up yet. I think everyone in this conference will have some story about higher wages, and eventually it's going to show up as inflation. This is why interest rates need to go up, to take some of that inflation heat out of the economy, to cool the economy somewhat, which is incredible that we're talking about cooling an economy which only a year ago we were worried about it collapsing due to the pandemic. But that is the realities of our operating environment. And for businesses, this is, I believe, the single most important issue. Those rising costs of living are also rising costs of doing business. And the key for Australian business is whether you can manage those costs. Now, I'm sure every business is doing everything they can to manage those costs and not have too much of an impact on their profitability, and trying not to put their prices up too much. We've had 30 years where being careful with your prices is pretty much a business operational norm, but that's changing. Businesses will survive or not on their ability to pass on these costs and to manage them. And this is where the competitive edge on this economy is going to be for the next year or two, and it's happening right now. Now, that leads me to probably the more distressing element of this talk, and that is that business insolvencies are on the rise. But the good news is they're from record low levels. So this chart shows ASIC data on insolvencies, external administrations. Up until 2015, they pretty much increased at the same pace as the growth of the economy, a constant rate of capital turnover, you might say. Low interest rates in the last 5 years have seen that rate decline. And then, of course, the pandemic saw it collapse because the insolvency procedures were suspended. Only voluntary insolvency occurred. Now, I believe we're going to start to see this really rise quite a lot in the next year. It's already happening. We're seeing this in the construction industry. And this is part of this dynamic environment. We're going to see a big increase in labor turnover. I just discussed that. This is capital turnover. This is the exciting, frightening, scary part of our economy against the context of a strong rate of growth, strong demand. Then we've got rising in prices, costs, inflation, interest rates. It really is going to be the most dynamic economic environment that Australian businesses have had to confront in general for decades. Now, I just want to finish up on Europe before summarizing the outlook, because we can't ignore what's going on in the Ukraine, and I don't think any of us should ignore. But in terms of the economics, this represents a major disruption to the geopolitical order. There's a number of foundations of Australia's modern prosperity. One of them is the strong connectivity Australia has to the world economy. Does what Russia's doing now signal a new world order? Are China and Russia going to break away? I don't know, but right now, Russia is being locked out of the world economy. Russia's exports are very much commodity-based, very similar to Australia. 40% of their exports are oil and gas, 75% of their exports are commodities. Again, very similar to Australia. While they may have a concentration of their exports in commodities, they sell to a lot of different countries. Only those in their top 10 export markets, only 3 of them are friendlies. Obviously, China's the big one. And China's going to be more friendly, I think, or more important for their exports going forward. Look, all this remains to be seen, but the Western democracies are locking Russia out. And this is a big hit to the Russian economy, a big disruption to global commodity markets, which I'm sure all of you are aware of watching. Well, you can just see it with the oil price. You look at the wheat price. You look at lots of these industrial metals prices. This is a big deal. It's a very big deal. And it does suggest there's big change potentially coming. Let me just calm the nerves on one factor, oil. This shows you the current oil price versus history, and I've adjusted it for inflation as well, the real oil price. We've seen this before, and we've actually seen higher real oil prices. So I'm not a big believer in the view that this oil shock is going to cause a global downturn. It's going to put a lot of pressure, particularly on Europe, because they're so reliant on Russian gas. But we have seen this before. And more importantly, if you look at the right-hand chart, is a declining reliance on energy in our economy. Fossil fuels have been falling in importance for our economies for decades. And this data is not up to minute. I believe with the energy transition going on right now, these processes are accelerating. So our reliance on these fossil fuels is declining, and our reliance on oil and the potential for oil to fundamentally disrupt the world economy the way it might have done 50 years ago is not going to happen in 2022 or 2023. Australia could actually benefit from this. I hate to say it, it feels awkward, but we have had a surge in our export prices up until the end of last year, which you can see there, and they're only going to go higher. Newcastle coal is a benchmark for global coal. $100 a tonne used to be regarded as strong. A big part of that increase in exports was the fact that it spiked to $250 for literally a month and came back to $100. It spiked to $400 in the last 4 weeks. It's now at $300. This is going to be a big positive hit to the Australian budget, government budget tonight. because of the revenues they get from taxing coal miners. But of course, it's a big revenue positive for Australia. So we're going to see, and it's not just coal, it's other things as well. Iron ore prices are doing well. Russia is very much like Australia, which is absolutely scary to say, and I feel terrible for the Russian people. They're 144 million people. We're 25 million people, and our economy is likely to be bigger than theirs in 12 months' time. That's my projection. It currently is at 85% of the size of theirs, but they're very reliant on exports of commodities. And if this persists, if they do detach from the world trading system, we may see big investments in some commodities, not necessarily energy and fossil fuels. It might be in other investments, but this could be a big positive for the Australian economy. Okay, just to wrap it up, to summarize, business investment in Australia has actually been going sideways for a decade. This is not what I call core CapEx. This is non-mining investment in plant and equipment. As an economist, this is actually the source of productivity. This is the source of higher living standards. Give people better equipment that they're more productive with, and this will improve the whole economy. Well, we've sort of gone missing on this front in the last 10 years. Partly to blame was the big mining boom, where a lot of marginal labour and marginal capital went to basically Queensland and WA. There's other reasons, but my view is that this is one of the features of the Australian economy that's shifting. And this strong economic environment of 2022 with high household savings, strong consumption, businesses investment, construction's booming. I know the industry is under huge pressure, but they're running at absolute capacity. And we heard just yesterday, the New South Wales government is delaying investment projects, major infrastructure projects, because it's too expensive. But the reality is they just can't get it done on any sensible timeline. So we are seeing a very strong economy, exports surging, as I said. But the prosperity of Australia, the next wave of growth for the next 5 to 10 years, I believe is going to be driven by businesses in Australia investing in new software, new plant and equipment, upskilling their workforce, new industries are rising. That rise in insolvencies, that's good news. That's old economy. That's old industry finally falling away, making way for new industry. And now more than ever, do we need the resources tied up in old businesses that aren't really part of our future for the new businesses that are rapidly expanding, with that tight labour supply as just a primary example. So I see this amazing environment for Australian businesses to take the lead. I really hope the government identifies this and starts to pull back. Their budget's way too big, their deficits are way too big, and we can understand why that's been the case. But the government needs to make way for Australian business, because it's Australian business that's going to take this economy to a whole new level in the next 10 years. And we've seen it before. Between 1990 and 2008, Australian businesses led the way. And that was the period when Australia's modern economy was built. So that's my message. The economy's booming in reality. A lot of people in politics and policy can't cope with it, because 12 months ago it was disaster. You got to be agile in this world, even us economists, and we've got to recognize that fact, and we've got to set policy for it. But most importantly, we've got to get ourselves ready for what's on offer, and that is a thriving private business community supported by sensible government and strong government, and government investing in the right things, in social services and all those things that make our society great, that we can afford to do. I'll just finish off with a couple of notes of caution, and I've touched on both of them. Interest rates are going up. Be prepared for it. I'm hoping they only go up by a percentage point or two. They might go up by more. And of course, if the Reserve Bank and other central banks have got it wrong and inflation really starts to go, then they could go up by more over the next few years. That's a risk. And the other one, of course, is the terrible events in Europe right now. They are a major uncertainty. Let's hope it all fizzles out. Let's hope Putin gets what he deserves, and not only gets out of the Ukraine, but gets out of our lives and the people of Russia's lives. But we don't know that. Maybe Russia and China are going to get together. Maybe it's going to be even more problematic. I don't know the answer to that. No one does. It's why we need to be very cognizant of this environment, but we can't let it stop us planning for our futures. And I think we've got a bright future. This country is one of the greatest in the world. Its foundations of commodities, both metal, energy, renewables, food, agriculture, a great population. We are an immigrant nation who can cope with it. All of these features set us up to be one of the great economies, one of the great societies of the world, and continue to be for the decade ahead. So I implore you to take advantage of this amazing environment, scary, frightening, buoyant, exciting. Be bold and go for it. Thank you very much for your time today.
Oh, look,
That was great, Warren.
absolutely fabulous, wasn't it? There's a few things that I just want to pick up on there, because once again, they link to a lot of the things that we're talking about later in this summit. Firstly, I think interest rates going up is critical for us as business owners to be thinking about. And this really dials into our discussion about acquisition. And we've got a panel with Warren later on this afternoon where we're going to be talking more about acquisition of businesses and the impact of things like interest rates rising. So I just want to note that. And a couple of the things you talked about, Warren, labour shortages being a massive challenge to business. Of course, every business I speak to at the moment is feeling that right now. And it's really interesting to see, what's on the horizon, albeit a little bit scary. But of course, it's important that we understand this as business owners so that we can work out ways to deal with this challenge moving forward. And the last thing that I just wanted to mention, in fact, there's two quick things. One is the baby boomer retirement and great resignation. This links in so well with the concept of the importance of getting your business ready for exit right now and getting the value out of it, because it's not just baby boomer retirement, it's also baby boomer sale of businesses and flood of businesses on the market. And this will feed into some of the things we'll talk about this afternoon, about this being an opportunity for acquisition as well, but also a threat in relation to exit of your own business. And the very last thing I just want to throw in there is insolvencies. I just love how you mentioned scary but exciting, Warren. So we're definitely going to come back to that one this afternoon in the panel.
Fantastic.
Yeah, that's
All
awesome.
right, well, thank you very much.
If I could just Sorry, Warren. If I could just mention to everyone, please feel free to put questions into the comments as well. We can't necessarily always answer them in these chats, but we will always capture them and make an attempt to get back to you later. Please keep in mind, Warren will be joining us on the panel this afternoon. So if you feel like you've got a burning question that wasn't covered just yet, certainly come back into that session, fire it into the Q&A section in that panel, and we'll certainly try to address it. I know I've got some more questions, Warren, and I'm keen to hear a little bit more about sort of productivity and innovation and how some of these changes are impacting that. But look, I look forward to seeing you in that panel and being able to explore that a bit more with you then.
Okay, fantastic. Thanks for having me, and good luck for the rest of the morning.
Thanks, Warren.